go.
Good morning. It's January 17, 2025. I am sitting here with Alyssa Lopes from Northpointe Bank. She's going to share some information for all of you. Go for it, Alyssa.
Good morning, everybody. My name is Alyssa Lopes. I'm a mortgage lender with Northpointe Bank, licensed to lend in all 50 states. I am fairly recently a new resident of New Hampshire, and I'm very, very excited to be here with Kelly to go over some things in regards to mortgage rates, and a little bit of information for some first-time home buyers. I know the biggest question on everybody's mind is going to be, where are rates today? I was actually just speaking with Kelly. Rate sheet just came out on my phone, and we're looking right about 7% right now, which has kind of been the common ground for the past few weeks. I know a discussion that I had with a couple of the guys in my office was kind of where the 10-year bond was. It has started to come down, which is really good news. The mortgage rates tend to follow along with the Treasury bond. So if it goes up, mortgage rates start to follow. If it goes down, mortgage rates start to follow. So it is really good news to see that it has started to come down. Will that directly impact mortgage rates today? No. If it starts to come down even more, we're going to slowly start to see mortgage rates follow. But stay tuned. We'll have lots of more information on that for you. And, we'd love to keep you updated. Next thing I did want to say is the Federal Reserve, and I'm going to keep kind of eyeing. I did write some notes down just so I don't forget anything. The Federal Reserve did lower their projected rate cuts from 2 as opposed to their projected 4 that they had set out in September. So basically what that means is they'll lower rates probably about twice a year. We'll kind of see what happens. That can increase, that can decrease. We really don't know. It's really up to the Federal Reserve. So we'll kind of have to just keep an eye on that. With the recent uptick in inventory, we have started to see more homes come on the market. I think Kelly and I really started talking about first-time home buyers and exactly what you need to know, what we're looking for as a lender, as a real estate agent when it comes to being a first-time home buyer. There are a couple things that go into that, but the first and most important step of all of it, before you even start to go on Zillow and go crazy, looking at all these houses that you don't even know if it are in your budget, or even asking a real estate agent like Kelly to go out and look at homes, would be to get pre-approved. Most important step in the entire process, because a few things will happen. 1, you're going to need to know exactly how much home you can afford. 2, you're going to need to know how much home is in your budget. Budget's a very big thing whenever it comes to paying for anything, whether it be your bills, your mortgage, your rent, which hopefully we can get you out of paying. But speaking with a lender is first and foremost. What's going to happen when you do speak to a lender, we're going to ask a few common questions about your address history, your work history, things like that. We're going to ask for some documents. We need to know exactly where your credit score is. So we would pull your credit, and then we'll go over things like your bank statements. Do you have any money set aside for a down payment? How much are you getting for your salary or your hourly rate? Going over all those things are going to give us an insight to the bigger picture and exactly what we need to get you qualified for a mortgage pre-approval so you can go start to look at houses. The best thing I think about speaking with a lender even prior is everybody worries credit score. Well, I don't think my credit score is good enough. Is it going to hurt my credit if I do a credit pull? And yes and no. Obviously, anytime you do a hard credit inquiry, it is going to have an impact on your credit score, usually 5 to 10 points. If you have a great credit score already, is usually where that stands. If your credit score or your credit history isn't really there, it could have a little bit of a bigger impact. The most important piece of that is that if your credit is not exactly where it needs to be or where you want it to be, having a full picture for your credit and your credit report can help your mortgage lender give you kind of a game plan to get you exactly where you need to be. So whether that's 30 days from now, 6 months from now, or a year from now, speaking to a lender, having that conversation about your credit, your income, your debt to income ratio, and your budget is certainly going to help you in the future. Lastly, I did want to note that we are having a first-time homebuyer seminar on February 20th at 7 p.m. at the Kingston Veterans Club. We're very excited. We hope you guys can attend. We'll have a lot more insight on first-time homebuyers. We'll be able to answer as many questions as you have, go over any comments and concerns. Hopefully we'll see you there.
Thank you, Alyssa. Have a great day.